With there being over 5.3 million people living in Melbourne right now and over 530 suburbs that make up the greater Melbourne region, it can be really difficult to find that needle in a haystack, the suburb set to boom in the coming real estate cycle in Melbourne. Now, to make your life super easy, I've picked 3 suburbs that seem statistically undervalued down in Melbourne right now, with a different range of entry prices to help you identify your next suburb to invest in. Now, the first suburb that we're going to look at is the most affordable one of the 3 suburbs, where you can still buy good quality properties between $600,000 to $700,000. Now, when I'm referring to a good quality property, I want it to be on a nice, quiet, family-friendly street. I want it to be on at least 400 square meters of land. I want it to be a nice, low-maintenance property that's been built within the last 20 years, and I want it to be something that's going to catch a good rental return as well. Now, if we take a look at 197 Botanica Springs Boulevard in Brookfield, we can see this incredible 4-bedroom, 2-bathroom, 2-car garage property that recently sold for $665,000. This property is situated on a 594 square meter block of land, so just shy of that ideal 600 square meters, but worth it when you can look at the property itself. Like, this is a big house that takes up the vast majority of that land, probably built at some point in the last 10 to 20 years. The rental return for something like this would likely be in the low to mid $500 per week at the moment. Vacancy rates in Brookfield right now, chronically undersupplied, sitting at 1.73%. So it shouldn't be too difficult to find yourself a tenant out there right now. But what I love about Brookfield is the average household is earning around $1,642 per week. And there is about 29% renters to 71% owner occupiers at the moment. So it has really good suburb demographics. And this is a suburb where you're 40 kilometers to the west of Melbourne. It takes you less than an hour to get to the city via public transport. It takes just over an hour to get to the city via driving, if that's what you're into. It's a very well located suburb and well connected to the city, especially if you're looking for a nice, big, low maintenance property at an affordable price with a good rental return. Now, next up, we've got Deer Park, located in West Melbourne once again, but a hell of a lot closer to the city than Brookfield. In fact, it's less than half the distance to the city, being just 18 kilometers to the west of Melbourne at the moment. Deer Park being the next domino across from like Sunshine West, and then you've got Deer Park just over there, is a super undervalued suburb at the moment, where you look at the 10-year average of property prices going up by just 6.3%. The one thing that I love about it is over the last 3 years, property values are up almost 5% in Deer Park, and over the last 12 months, properties are up almost 4% as well. Now, knowing that the average property in Melbourne has actually declined over the last 3 years and the last 12 months, according to CoreLogic, means that this particular suburb is outperforming the average at the moment. A few of the things that I love about it right now is the vacancy rate sitting at less than 1% at 0.89%, so chronically undersupplied. And what that is resulting in is rental values are starting to increase at the moment as well. You've got a beautiful demographic there. People are roughly around the age of 35. They earn around $1,450 per week as a household. There's 29% renters. So all of these data points are really stacking up to make me believe that Deer Park is a super undervalued suburb within 20 Ks from the Melbourne CBD, with a lot of potential over the next 5, 10 and 15 years. Now, the median house price currently is looking at about $665,000, but obviously the average property is not what you want. You want to be buying an above average property. So when I say an above average property, if we take a look at number 17 Abernethy Avenue in Deer Park, this is the type of high quality property that you want to be securing if you were to invest in Deer Park right now. Why is that? Because it's a 4-bedroom, 2-bathroom, 2-car garage house. It's going to suit the vast majority of the people that live in that particular suburb. It's on a 544 square meter block of land as well, and it's in a really nice pocket of the suburb. So a quiet, family-friendly street, close by a park, really close to the local train station as well, like literally less than a 1 kilometer walk to the local train station. So it'd take you less than 30 minutes to get into the CBD via public transport from this property. And this thing sold for just $875,000 in early August. So really affordable, considering when You're investing in Sydney. To get within 20 k's from the city, you need at least a $1.5 million plus budget. In Brisbane, to buy within 20 kilometres from the CBD right now, you need at least a $900,000 budget. In some areas, even more than $1 million as well. So it's actually more affordable down in Melbourne right now in comparison to Sydney and Brisbane, which obviously Sydney's always more expensive than Melbourne, but not that much more expensive than Melbourne right now. And generally Melbourne is more expensive than Brisbane. It's just because it's been absolutely hit hard by COVID and everybody moving away from Victoria through those years of the pandemic. But now it is actually the state in Australia that's attracting the most population growth, at over 160,000 residents moving to Victoria every single year right now, which is resulting in an increase in property prices, a decrease in vacancy rates, and hopefully an increase in rental returns as well. Now, whilst we see so much value in those suburbs, in the Western Corridor, in that middle ring of Melbourne right now, there is definitely some super undervalued suburbs in the southeast as well. So now we're going to take a big drive down into the southeast to Cranbourne West, one of the most undervalued suburbs down in that region that is absolutely gentrifying at the moment. Now, Cranbourne West is about 41 kilometres from the Melbourne CBD. This suburb has done about 8% per year for the last 10 years. It's up 7% over the last 3 years and just over 1% in the last 12 months. So it's actually doing better than the average property in Melbourne at the moment. Rental vacancy rate sitting at 0.79%. So chronically undersupplied from a rental perspective at the moment. But some of the things that I love is the demographics that live there. Like, there's some really nice schools in Cranbourne West. There's a beautiful golf course there as well. So it does attract a more affluent demographic. So this suburb in particular has a median weekly household income of $1,856 per week, and there is 22% renters, which I absolutely love, because obviously some of the areas down there in Cranbourne do have a lower socioeconomic demographic, do have slightly lower average household incomes, and do have slightly higher percentage of renters, but not this particular suburb. Now, it is hard to find undervalued properties in this suburb. You do need a pretty solid budget to be able to get a really high quality property. But I have managed to find one that sold on the 14th of August for just $772,000. Now, this property is number 25 Scarborough Avenue in Cranbourne West. You can check it out on realestate.com. It's a 4-bedroom, 2-bathroom, 2-car garage, low-set brick and tile house on a 530 square metre block of land. Located on a nice, quiet, family-friendly street. It does back onto St. Peter's College, but it actually backs onto the football field down there. So it actually has a decent outlook. And obviously, if you're not too close to where the kids are going to come in and out of school every single day, then it is something that we can obviously justify down there. The property itself, obviously built, you know, quite some time ago, probably 20 or 30 years ago, but appears to be well maintained and looked after as well. It looks really tenant ready, super low maintenance at the moment. You look at the average rental property in Cranbourne West, renting out for roughly around about $575 per week. I'd say this property is going to be fetching roughly those mid 500s up to potentially $600 per week. So a decent rental yield, especially with the capital growth expectations for those areas down in the southeast. Now, obviously, those southeastern suburbs were developed a long time ago in comparison to the west. So generally, you have to go a bit further away from the CBD in comparison to. But this is just because that southeastern area of Melbourne was developed a hell of a lot longer ago compared to the north, the west, and the southwestern suburbs of Melbourne. So there's just so much value down in Melbourne at the moment, and it is a market that you really need to wrap your head around. Whether you've got a budget of, say, $600,000 to $700,000, and you want to look in those northwestern suburbs out in the Melton region, or if you've got a healthier budget around that $800,000 to $900,000 budget range, you can buy in that 15 to 20 kilometre radius in that western corridor around Sunshine West, Deer Park region. But then obviously, if you want to target the southeast and go to those areas that were developed a long time ago, that are still gentrifying but do have a lot of potential for the future, you can look at your Cranbournes Wests, and find properties anywhere from sort of $750,000, all the way up to sort of $1.2 million, depending on the suburb you want to invest in, depending on how close you want to get to the water or how close you want to get to the CBD. But there's 3 great suburbs, depending on your budget, to wrap your head around, to learn more about, jump into the recent sales history, to educate you on the current market conditions down there. And obviously, if you are looking to invest down in Melbourne in the short-term future, here's a couple of suburbs. G'day guys, my name's Ben and I'm the director here at Pumped on Property, and I just wanted to say a massive thank you for watching our content today. Now, if you're thinking about buying an investment property in the next 3 to 12 months, then the team and I would love to offer you a one-on-one strategy session. In that session, we can talk about exactly where you are right now, where you'd like to be longer term, and we can deeply educate you on the Australian market. And then you can take that information and go and absolutely smash it on your own, or potentially become one of the small number of clients that we work with each week. To book your session, all you have to do is go to www.pumpedonproperty.com and click that book your free strategy session button. But either way, we wish you all the best on your journey as an investor to financial freedom.